Silver is falling, investor interest is fading, and most people think the opportunity is gone. But what if that's exactly when the real opportunity begins? Because right now, something very unusual is happening in the market. Institutional money isn't running away from silver. It's quietly repositioning, not loudly, not publicly, but strategically. And almost nobody is paying attention. Welcome back to John Forecast, where we decode the macro forces behind the gold, silver, and global market moves. So here's the real question. Why does silver look weak at the exact moment it might be setting up for one of the biggest moves we've seen in years? And why will 95% of investors completely miss it? Because right now we're seeing multiple forces collide at once: a global energy shock, a sudden shift in market expectations, a hidden signal from the bond market, and a silent rotation happening inside institutional portfolios. And when these forces line up, they don't just create volatility, they create opportunity. But not the obvious kind, the kind that feels uncomfortable in real time and only looks obvious later. So what's really going on here? Why is silver lagging? What are institutions actually doing? And what happens next? First, we need to clear something up. Silver is not just one thing, and it's three things at the same time. It's an industrial metal, it's a monetary asset, and it's a psychological trade. And that combination is exactly why most investors misunderstand it. Let's zoom out and look at what's happening right now. Over the past several weeks, global markets have been shaken by a sharp energy shock. Oil prices surged rapidly. As prices moved higher, consumers started pulling back. Confidence dropped, and markets reacted. Stocks pulled back. Volatility increased. Even traditional safe havens didn't behave the way people expected. Gold dropped. And silver. Silver. It dropped even harder, and that creates a very powerful illusion. An illusion that silver is weak. That silver is underperforming. That silver is not where you want to be right now. But that's not the full story. Because markets don't reward what looks strong in the moment. They reward what is mispriced. And right now, silver might be one of the most misunderstood and mispriced assets in the entire market. Uniquely driving this entire situation, Frost Morris's revised rise sharply wanted to understand the prices rise through a predictable way. At first marks the entire economy, because higher energy costs affect everything: transportation, manufacturing, food production, consumer goods. So inflation expectations rise, and when inflation expectations rise, bond yields go up. Central banks stay aggressive. Markets become cautious. But that's only the first phase, because when energy prices go too high, the story changes. At a certain point, high energy prices stop being just an inflation issue and start becoming an economic demand destruction problem. Consumers start cutting back. Businesses see margins shrink, travel slows, spending weakens, and suddenly the economy starts tightening. And markets see this before the headlines do. Before official data confirmed firms start talking about it, before most investors even know this in the entire markets. Right now, the bond market reacts. It's sending one of most in the entire market. Bond yields are falling, even while energy prices remain elevated. That should not be happening. In a pure inflation environment, yields rise. But when yields fall during energy shock, the market it's telling difficulty. It's pricing RV shiti. And the EDRX, and Stavergrixes don't use Samridodon, because when stricing in slowdown, that slowdown energy shock, they pivot, sometimes slowly, sometimes quietly, but they pivot. And markets don't wait for the announcement. They move before it happens, which means by the time you feel confident, by the time headlines confirm the shift, the move is always CTI, and this is exactly Stardial Kundit. Silver behaves differently where start back into the picture. This is exactly where siltly than most assets, because it reacts to both sides of the cycle. During stress, industrial demand fears push it lower, pair liquidity tightening pushes it lower, so it tends to underperform early. But that's not the end of the story. Because once conditions start to shift, silver doesn't just recover, it accelerates. In previous market cycles, silver has a pattern. It lags early, then moves aggressively once liquidity returns and rate expectations shift. And that shift is forming right now. This is the key insight. Silver is not weak because it's broken. Silver is weak because it's early. It's reacting to the current phase of the cycle before the next phase begins. On the next phase is where the real move happens. Now here's something most investors don't think about. Large institutions don't wait for confirmation. They don't wait for headlines. They don't wait for clarity. They don't wait for certainty. They position early. They look at signals like bond yields, tail liquidity trends, tame risk positioning, market sentiment. And when those signals align, they begin shifting capital. Quietly. Not through announcements, not through interviews, through actual portfolio changes. And by the time retail investors notice it, the move is already underway. So now the big question becomes, if this setup is real, if the signals are already forming, if institutions are already positioning, then what exactly are they positioning into? And more importantly, what does that mean for silver from here? Because the next phase of this story is where everything starts to connect. So let's pick up exactly where we left off, because if the setup is forming, if the bond market is already signaling a shifty, if institutions are already repositioning, then the real question becomes, what are they actually doing with their money right now? And where does silver fit into that move? Because this is where things get very interesting. Now, TANSTT-PALPALBOPA, large institutions don't invest based on headlines. They invest based on structure. They break the market into two categories: pan assets that are structurally damaged, pan assets that are temporarily mispriced. And that distinction changes everything. Because during a shock like this, some assets actually deserve to fall. Think about it. If energy prices surge, certain industries get hit directly. 10 airlines face rising fuel costs, transportation margins shrink, consumer facing businesses lose demand. Those aren't temporary issues. They're real, so those assets stay weak. But other assets don't have that problem. They fall not because they're broken, but because markets are panicking, because liquidity is tightening, because investors are de-risking. And that creates opportunity. On you Ichirui Silver Fisti, silver sits right in the middle of this divide. In the short term, it gets treated like a risk asset. It gets sold, it gets ignored, it gets pushed down with everything else. But structurally, it's not broken. In fact, its long-term drivers remain intact. The industrial demand from electronics and solar pay monetary demand during easing cycles of investor demand when liquidity returns. And that's the key difference. Silver is being repriced, not destroyed. That's being repriced point. There's an SES for the acetai. They both buy, they don't exactly the kind of this instant features. They don't all NSI. They just buy random at once. They scale in, they test levels, they add gradually as signals confirm, and that's why retail investors don't notice, because it doesn't look like a big move. It looks like sideways price action, like weakness. But under the surface, positioning is changing. No, here's where things accelerate, because eventually the market forces a response. A policy response. One slowdown risks become too large, in, they step in these conditions, they cut rates, they inject liquidity, and when that happens, shift off fast. Liquidity increases, risk appetite returns, capital flows back into markets, and the assets that were beaten down the most move the fastest. And silver is at the top of that list, THE Silver X below PLZ, because once it begins, silver doesn't just recover, it accelerates. Here's why. It benefits from multiple forces at the same time. Paying lower rates, increase investment demand, improved sentiment boosts, industrial outlook, pair liquidity flows into commodity momentum traders pile in. That's why silver moves can feel sudden. And all of that happens at once, sudden, violent, unexpected. Because by the time most investors notice that the move is already underway. This isn't a new pattern before. In previous cycles, after 2008, silver surged once liquidity returned. After 2020, silver outperformed many major assets during recovery phases. During past easing cycles, silver consistently moved aggressively after policy shifts. And each time, the move didn't start when things felt safe. It started when things felt uncertain, when sentiment was low, when confidence was weak, when confident investors were still hesitant. No, this brings us back to the core idea of this video. Why will most investors miss this? Because they're wired to wait. They wait for clarity. They wait for headlines that confirm the shift. They wait for prices to rise. They wait for everything to feel right. And by the time it feels right, it's already too late. The easy part of the move is gone. Now, rule number 1, don't chase what already moved. Rule number 2, follow signals, not headlines. Rule number 3, position before confirmation, because confirmation is always late. Every major market move follows the same pattern. Confusion at the beginning, in the middle, confidence at the top. And right now, we're still in the confusion phase. A phase where that signals are shifting, their sentiment is weak, their positioning is changing quietly, and that combination is exactly what creates opportunity. Most people will look back at this moment and remember uncertainty, volatility, confusion. But a small group will remember it differently, as the moment the setup was already happening while everyone else was waiting. So what do you think? Is this the early stage of a major silver move or just another short-term reaction? Let me know in the comments. And if you want to understand markets like this, not just what's happening, but what's coming next, make sure you subscribe. Because most people follow markets, smart investors get ahead of them.